Hi everyone, hope you're doing well, and today we are going to do my US stock market portfolio review. So I'm going to show you all the stocks that I'm currently holding, the positions that they take up, and yeah, it's just a monthly series that I've done on the channel where you can kind of track my portfolio month by month and see how I'm doing and position size and everything like that. It's something I've run on the channel for like 3 years now, so you guys that have been here for a very long time, I'd like to know if any of you guys have been there for the 3 years that I've been doing this portfolio review. But yeah, we're going to take a look and see how everything's doing. And it also gives that transparency as well, that you guys can see like my positions and also like if I'm actually any good at what I say on here. I think it's always good at that point of view because, you know, so many people here talk about stocks, but you never see how much they're up, how much they're down and everything like that. Whereas you can see here month by month how my portfolio is doing, and you know, if you can see some sort of gains, then maybe, you know, hey, that guy kind of knows what he's on about. But yeah, we're going to take a look at this portfolio. So I've got a jira portfolio, I've got a trading 212 portfolio, and I'll show you everything that's going on in there. Obviously, with it being a portfolio, obviously sometimes, you know, stocks that have had amazing gains aren't on here because they're being sold, but it kind of gives you an up-to-date what's kind of going on here. But yeah, all these prices were taken from Sunday, so there's not been too many changes since Sunday. I did average in 2 more companies, and I also started a new position in a new company which won't be on here. If you do want to know what that company is, there's a link to the Patreon and it's on there. So if you want to join through there and see what new companies I'm buying, join through that link. And also if you do want to start getting into the stock market, there's a link to a free trade account and trading 212 account, and you join through there, you also get a free share as well. But yeah, we'll get started on these portfolios. So I'm going to start off with my Giro portfolio, and I'm going to start at the top, and then I'll make my way around and then go to the trading 212 one. So we've got, first of all, we've got Alibaba. Now these guys are reporting earnings by the time this video probably goes up, so that might change where it's at exactly right now, but we're currently up 32%. This position is one that I've had in the portfolio for maybe 1 or 2 years now. So it was a position that was up quite a bit, but because Jack Ma decided to play hide and seek, it kind of took the stock down and that position went down. So yeah, it has a bit of a slump a little bit. This was a position that I actually sold 50% of back in August 2020. And when I did that, I took something like a 70% gain, which was really nice. So it does show you that sometimes it does pay to just take a little bit of profit. And yeah, and I did buy some more shares in the Christmas Eve dip that it had. That's in the other portfolio, so I will get onto that in a little bit. But yeah, that's the first position. Next up is Carnival. So this one's had a bit of a rough month, as a lot of travel stocks have. Carnival's been in this portfolio for just around about 2 to 3 years now. This company was obviously not doing too bad, and then obviously 2020 comes. We know what the rest happens with what happened in the world in March time 2020, and it's just not recovered since then. It's a company that I'm probably just going to hold out now until it kind of gets back operating, and then hopefully the share price comes back a little bit, try and get out break even. So yeah, I'm just playing a bit of a waiting game with that one. Next up is Dropbox. So this one is a company that I've had in the portfolio, I think since 2019, the back end of 2019. And yeah, I'm really surprised that Dropbox hasn't done that much really over the last kind of 1 to 2 years. I'm hoping it starts to wake up a little bit, because the thing is that the valuation of it just keeps dropping, and like that forward P gets lower and lower, and the growth's getting higher and higher. And it's like some point this is going to wake up, and Wall Street are going to notice this one. But because of that, it has led me to build a bigger and bigger position in, which is pretty good. But I would like to see Dropbox wake up a little bit over the next kind of, you know, year, 2 years, and hopefully that's one that I would be happy to sell out around about the $40 range. So hopefully that one wakes up a little bit in the next few few months really, or this year. Next up, Facebook. So this has had a little bit of a drop because of the deal that is going on with Apple, but we're still up 46%. I do expect this one to reach the 100% club within the next 2 years. And yeah, it's a good position. I've got some more shares in the other portfolio as well, but yeah, it's a company I love. It's a company that I generally can't see myself selling at any point at the moment. So I'm really happy with where that one is at the moment. Next up, Gang. So Gang has had a fantastic month. Now, the problem is I know a lot of you guys have an amazing average on it because you've been hearing me talk about it on the channel so much that I think so many people have, like, when I started talking to it and the channel growth and everything, people were like, oh, I like the sound of this gang company, I'm going to go buy some shares. But when I was doing that, the share price was dropping, and then everyone else kind of like got the benefits of that and were buying in like the like 18, 17, 16, even $15 range. Maybe some guys even got it at $14. And some of you guys, I've seen it, you guys are up like 40, 50%. But because I started buying quite a while ago and I just averaged in, I know my gains aren't as good as some of you guys. I know some of you guys are up like 30, 40, 50%. But yeah, I'm in the green now because last month it was down like something like 15% or something. So you can see it has, gone from being negative 15% up to plus 15%. It has been on a good run. It's probably due a little bit of a pullback, I'm going to say that. But yeah, it's a great company, and this is one of the longest holds in my portfolio. Like, this is a 5-year hold in here, and realistically, when I look at that 15%, it's nothing to what I have envisioned for it. Like, I think that Gang's still going to be like a massive company going forward. Like, I think I would expect to like get 300% return on this one. So I've got big ambitions for it. So yeah. Next up is GWPH. It's coming up 42%. It's one that I kind of thought about. Is it time to maybe shall sell it? Maybe take a gain on it. But I think I'm still going to hold it at the moment. Yeah, but got a 42% gain on that one. Huye's come back from being negative. I think last portfolio review, Huye on my portfolio was down 20%. It's now up 13%, and Huye is one that I'm definitely looking to get somewhere between 100% return to 200% return on that one. So yeah, and I've built a pretty decent position in that one, as you can see. Then we've got JD.com. This is probably one of the longest holdings left in this portfolio. I think I've held my JD.com position now for maybe 3 to 4 years now. So yeah, it is one of my longer holdings in this portfolio left. And yeah, it's a great gain. It's 308%. I've sold half my position now, but I'm looking at the rest of it now and I'm like, I will never get them averages again in JD.com. Realistically, the company is still growing absolutely huge, so why should I sell it? And yeah, I might just hold on to them shares for the rest of my life now. I just can't see myself selling them. So yeah, it's one that I probably will hold until I retire now. And by the time that comes around, hopefully that's higher than 300%. But yeah, it's a great position. Next up, we've got Microsoft. So Microsoft is up 96%. It was 100% return, and after earnings it went back into the 100% club, and then it's dropped down again. Yeah, it's really weird, but Microsoft is one that what I've got left, I trimmed my position back in August, and what I've got left is probably what I will hold of Microsoft because it's a great average. Same again, this is an average that I've held for like 3 to 4 years now, and yeah, I've took some nice profit on it. I took a profit of over 100% return on it in August. What I get paid in dividends as well is a very good yield, and yeah, it's just one that, I mean, can I see Microsoft slowing down anytime soon? Probably not. So yeah, I think I'm just going to carry on holding that one, to be fair. Next up is Pinterest. So Pinterest, have got over 181% return on this one. I have sold a little bit on here. I'm on the fence where to sell the rest of it. I think that once again I've got an amazing average, and I don't know if I would. Some of these shares I probably want to hold for a very long time. At the same time, I'm looking at the company, and it is at a rich valuation. I still think it's got a lot of EU growth still to have, and that's what's keeping me holding it at the moment. So yeah, I'm not selling it anytime soon, but there's kind of a few things in my head of like, when do I trim my next batch at the moment? So yeah. So we've got Visa. Visa's currently up 13%. It's had a bit of a dip at the moment. One that I'm thinking about buying a little bit more of. We'll see. It's just been so quiet compared to like the other payment companies like PayPal and Square that maybe when we get back to some normality, people will shift from PayPal to Square back to Visa. We'll see what happens there. And then we've got Disney. So Disney is up 18%. This was a position I started buying in literally 2 months before COVID. So it's amazing that this company is up, in my opinion. Like, to buy a very big travel company, really, and tourism company, right before COVID, and now to be in the green, I think is amazing. I've got some more shares in my portfolio that I bought in COVID, but yeah, I was buying this at 52 highs. I was like buzzing off the Disney Plus launch, and yeah, I didn't really want to do it, but I was like, is there going to be, if there's so much good news coming out, you know, is there going to be a dip in this one? And I just couldn't see anything happening. And then obviously the next thing you know, we get a pandemic, and I do get a bit of a dip in it. But yeah, you know, compare that to like Carnival and how quick that's recovered. It's really good. So what we'll do is we'll go on to my trading 2 and 2 portfolio. So starting off with, we've got Alibaba. This is the shares that I bought on Christmas Eve, currently up 13% on that one. Same again. I think on Monday, so all these prices was taken on Sunday. I think on Monday it had a pretty good day as well. Obviously it's got earnings, so that might change the price by the time this goes up. But yeah, those are the shares that I bought on Christmas Eve. And then we've got Amazon. Currently flat on that one. It's my newest position. It's one that I started buying, I think, on the 14th of January. So yeah, the position size is only, you know, half a month old. This also has earnings by the time this video goes up, I believe. So that might change the share price a little bit, but I'm going to try buy as much as I can in this one. So hopefully, you guys know the outcome, but hopefully earnings took it down, but we'll see. But yeah. Then we've got Beyond Meats. You know, that's a pretty big chunk. It's a company that I've been buying really heavy of over the kind of last 3-4 months. Currently up 35% on this one. It had a big massive jump last week, and then it's come back down a bit. At one point this position was up like 70%, which is crazy. But yeah, I mean, this is still going to be a very bumpy ride for this one over the next few months, but that jump last week just showed how much potential this company will have in the next 24 months. And yeah, it will do well going forward. Next up is Boeing. So Boeing is a company that I prioritized in the COVID dip. It's currently up 40%, but it used to be up a lot more than this. It's had a bit of a pullback because of it being the airline. I've talked, you know, like I said about the airline sector at the moment, it's just, you know, dropping down at the moment. But Boeing will be one that, you know, in 3, 4, 5 years will be back to a $300, $400 stock. So yeah, I'm just happy to hold that one. And yeah, when the dividend comes back will be somewhere when I consider selling that one, which I can't see the dividend coming back for like another 2 years yet. So yeah. Next up, Facebook. So this is some more shares that I bought in the COVID dip, currently up 30%. Used to be a bit more once again, but obviously we've got the situation with Apple going on. Callaway Golf. So this is a company that I started buying, I believe, in December. It's up 13%. I'm a bit annoyed because I don't want it to go up. I want it to go down so I can buy some more shares. This is a company that I wanted to make a bit more of a bigger position. I want it to be about the position size of something like Turtle Beach in the top corner, top left corner. So yeah, I still wanted to double the position at least. So hopefully this one has a bit of a pullback. It's gone up a bit too soon for me. We've got a small position here of Gang, which is currently up about 29%. So I bought a few more shares in this one in the Trading 2 and 2 portfolio. I don't know why, but yeah, we've got some in here, which is looking quite nice. We've got Glue Mobile. Now, I don't know what's going on here with the pie chart, but yeah, it should be bigger than that. I think the lines have kind of gone out there and you can't really judge it that well. But Glue Mobile is about roughly the size of where Callaway is. It's a company that I probably will buy a little bit more of. It's not going to be a huge position, but yeah, it's one that I'm kind of just building up at the moment. It's one of the newer positions. It's a company that I started buying in the back end of December, so it's about a month old position, that one. So yeah, that's one that I'm expecting to get about 100% return on that one. It's not a long-term hold at all. It's just that I think it's a very undervalued company and it's a decent company as well. Next up, InMode. So yeah, it's a big position in my portfolio. It's currently up 80%. I do believe that InMode will be a 100% return member by the end of this year. And yeah, it is a great company. There's not much more I can say about that. The earning, if you're an InMode shareholder, you saw the earnings that they just brought out and it was unbelievable. So yeah, pretty happy with that one. Next up, Microsoft. Bought this is shares from the COVID dip, up 30%. We've got a little bit more Pinterest in here, which is up 247%, which is fantastic. And then we've got some skills, that's up 64%. Really, really happy with that one. And yeah, it's a company I would like to buy a bit more of, but I don't think I'll be able to. And if I am going to buy some more of, I'm probably going to have to average up a little bit. So yeah, I do want to buy more. If there was a massive dip and somehow it drops like 20-30%, then maybe that could be a good time to average up on it. But yeah, I'm happy with how that's performed. It's a great company, and obviously ARK buying also gave it a lift as well. I know ARK started buying DraftKings as well, which was really annoying because DraftKings was one of my top 3 targets to get in the portfolio this year, which then just helped it up once again. So I don't know about that one. We'll see what happens there. But Tattoo Chef, this has had a little bit of a pullback. This was up a lot more than this, but it might give an opportunity to buy a few more shares. But yeah, I'm sure when they bring earnings out, earnings will be pretty strong, I hope. So yeah, I've got a nice position. I'm happy where it is. I could potentially buy a few more, but with what I have at the moment, I'm pretty happy with that. Turtle Beach currently up 59%. So this is a company that I want to make about 100 to 150% return on. This is a lot more of a shorter term hold for me. I'm probably looking to hold this for about 12 to 24 months. I think earnings should be pretty good on the front, on Turtle Beach's front, especially while we have the PS5 coming out. So yeah, somewhere between 100 and 150% return would be where I'm happy to take some profit on that one. But yeah, that's where I'm at with Turtle Beach. We've got Visa. This one's come down a lot. It's one that I'm considering buying a lot more of, just like I said in the other one. And here we go with Walt Disney. These are the shares that I bought in the pandemic dip. And yeah, nice 50% gain. Disney Plus numbers absolutely amazing. Really happy with the Disney shares that I bought there. Just gave me such an opportunity to buy some more shares, and yeah, those my portfolio overall. Obviously there's some nice returns from like the older positions in here, you know, your Pinterest, your Microsofts, JD.com, you know, all those are the you know, you can see the longer term holds there that have been in the portfolio for a few years now. You can see the amazing gains, and then you can see some of the newer blood that are getting to the 12 months mark, where I want to see them start performing, that are starting to do really well in the portfolio. And then you kind of see some of the new blood that's coming here, you know, Amazon, which is a pretty new company in the portfolio, Beyond Meats, a pretty new company, Callaway, Gang, Huye, Tattooed Chef, Turtle Beach. So you can see the new blood that is coming here. And obviously, you know, when you look at this portfolio, it never shows you some of the gains that we've had previously. Obviously some of the ones that are still standing are there, but you know, the gains that we had last year on some of the companies and the 100% returns were pretty good. You know, Revolve's gone now. That was a nice return. But yeah, overall I'm pretty happy. I'm really happy with how the portfolio is. And it's probably the portfolio that I'm most optimistic about. You know, the companies I look in here that, you know, will probably give me 100% return, hopefully over the next 12 months. You know, I think that Beyond Meats is a contender that could go in that category. I think InMode will go in that category. Maybe Tattooed Chef, maybe Skills, Turtle Beach. I think there's a few companies here that could push into the 100% return club this year. So yeah, that's the portfolio, my US portfolio. I hope you enjoyed it. If you could, smash the like button. If you are new, subscribe. And I'll see you on the next video.